If you are working in India, chances are that your employer might provide you with a corporate health insurance policy. That can be for 5 lakh rupees, 10 lakh rupees, and sometimes even your parents might be covered. And now you might be thinking one financial responsibility is taken care of. But there is one question that I want you to ask yourself. Is this corporate health insurance policy enough to protect you? Because there are 5 hidden clauses in these policies, and certainly that your employer is not paying for them. So let's begin. Now imagine your father needs emergency surgery, and since you have a corporate health insurance policy which covers parents as well, you are thinking that this financial situation can be handled easily. Now the surgery cost is around 5 lakh rupees, and you are thinking that insurance will cover most of it, but you would be surprised to find out that your insurer might only approve 1.5 lakh rupees from that cashless claim that you asked for, and rest of it has to go out from your pocket. Now what happened here and what were the limitations that you need to understand? Let's quickly look at them one by one. Number 1 is room rent limits. Let's say that your policy allows you a room rent limit of up to 5,000 rupees. But you end up opting for a room for 10,000 rupees, thinking that you might have to end up paying just for the remaining 5,000 rupees. And let's say the hospital admission was for 2 nights, which comes down to 10,000 rupees. If the total cost is 1 lakh, which means you pay 10,000 from your pocket? No. You might have to pay somewhere around 40 to 50,000 from your pocket. That is because when the room rent increases, so does the other charges in that proportion. For example, that can be nursing fee, surgery fee, and other charges that are related to it. So the insurer deducts these amount in the exact proportion. Now, second are the co-payment clauses. Now, this means that you can pay a certain percentage of the claim yourself. For example, if the policy talks about 20% co-payment, which means if the claim was for 5 lakh rupees, then you can pay for that 1 lakh rupees yourself. But a lot of employees do not know that a co-payment clause exists in their documents because that is somewhere hidden in the fine print. Now, third is disease-wise sublimit. Now, this means that whatever your health insurance total sum covered is, there are specific diseases which are capped at certain limit. Now, to give you an example, let's say that your health insurance cover is about for 10 lakh rupees and you want to get your cataract done, but the cap is for 50,000 to 1 lakh rupees. So even though your sum insured is for a larger amount, but if you exceed that cap, then you might be ended up paying from your own pockets. Now, let's talk about the most important problem, and that is that this corporate health insurance policy, which is in your name, is actually owned by your employer, whereas you are a mere beneficiary, which means to say, in case you retire, switch job, are laid off, or go to such a company that does not offer a similar plan, in that case, all these benefits cease to exist. And this can be very dangerous and people fail to see it. Let me explain you with the help of an example. For example, from the age of 25 to 35, you were working in a particular company which offered you with the corporate health insurance policy, and you did not have your personal one on the side. Now, during that period, let's say if you have developed a type 2 diabetes, in that case, if after 35 you want to take a career break or you want to start your own business, immediately you will be left with no health insurance policy. And if you go out to opt for your personal one, then that insurer is going to see you as the first applicant, which is coming with the pre-existing disease, which means that you might have to pay for higher premiums, longer waiting periods, or some sort of exclusions, and that is not a good thing to have at that stage. Another issue is rising medical inflation. Healthcare costs in India are rising rapidly at about 12 to 14% annually, which means to say a 5 lakh cover that is adequate today may not be sufficient in the coming 10 to 12 years. If 5 lakh was sufficient today, you might need 10 to 12 lakh in those coming periods. Look at this chart and you will understand that how a small cover can quickly vanish. Here's the catch. With your personal health insurance policy, you can increase your sum insured with every year depending upon your need and how your income is increasing. But with the corporate insurance policies, the problem is that you have to be satisfied with whatever your employer is renewing with. And honestly, there are hardly chances where an employer is going to increase these costs every year, which means to say that after a few years, under the corporate health insurance, you might feel that you are underinsured. Now, before these turns into that corporate health insurance is bad, let's be fair, it's not. You see, for a lot of salaried employees, it's very useful and important because this acts as their first layer of financial protection. See, the first advantage is ease of getting covered. If you apply under the personal health insurance policy, then you might have to give some medical tests, they will check your health history and whatnot. And based on that, your premiums are decided, your waiting period is decided, and other inclusions or exclusions are decided. But with the corporate policy, the onboarding happens from the day one, even though you have some pre-existing problems or not. Now, second is the faster coverage. Under the personal health insurance policies, there might be waiting period depending upon the illness, which can stretch to certain years. But with corporate health insurance policies, that is not the case, and many of them do provide maternity benefits as well. Third is convenience. Under the personal health insurance policy, you might have to go through a lot of fine print language, their jargons, and understanding what is good and what is not good for you. But in case of corporate policies, that generally exists for your benefit. And lastly, it's about the cost factor. You see, the premiums are a part of your CTC, but since they are not deducted on a regular basis, so psychologically it feels that your insurance is for free. Now here comes the question. Can I not convert my corporate insurance policy into a retail insurance policy? Well, technically, yes, you can. IRDAI allows you to convert your group insurance policies into a personal insurance policy, but there is not a smooth way to do it. There are a few points that you need to keep in mind. First, many employees don't even know this option exists until they have already left the company. Second, portability requests needs to happen within specific timelines linked to policy renewals. If you leave your job mid-year, timing becomes tricky. Third, the process requires coordination between your previous employer, the old insurer, and the new insurer. Fourth, even if waiting periods are carried forward, you may still face fresh underwriting based on your health conditions at that time. And finally, while it is a right given by IRDAI for insurers to offer conversion to an individual policy, but do check with your insurer of the corporate plan. So yes, portability does exist, but it's not a magical solution that will finish all other problems that comes with it. Also, I would like to thank Ditto for helping us to collate this data. Now the question is what you should actually do about it. Number 1, buy your health insurance policy when you are still healthy. That is in your 20s or early 30s when you have not developed any serious illnesses yet. Second is read that policy document very carefully because hidden in those fine prints can be certain conditions which might be in your favor, which might not be in your favor. Third, do not wait for a job change. A lot of people wait to buy their personal policies after they leave their job. But that you should not do because later on, if you develop any illness, it can cost more to your pocket. And number 4, take that sum insured number very seriously. If you think a 5 to 10 lakh cover is sufficient in a tier 1 city, then you might need to think again because if you remember, the healthcare costs are rising rapidly. Now, if your conclusion is that corporate health insurance is bad, then that is a wrong takeaway. Because corporate health insurance is equally important and useful, but you just cannot ignore the personal health insurance. Now, for more such financial videos, you can check out our other regional channels as well. I hope you liked this video. See you in the next one. Until then, happy investing.
it.